And it's on. So welcome everyone once again. It's Marcel, and also here's Shansi and Tomasz too. So yeah, welcome everyone, guys. And yeah, I was just saying a monologue, but I forgot to start the recording. So you missed the monologue. You missed the monologue, but the actual meaning of that monologue was that I'm hosting these backtesting sessions to present to you guys that how this plan works that we are trading on. And yeah, technically, these webinars, these backtesting webinars are really good to see how the plan works and how to execute the plan in backtesting sessions. And you can actually execute the same plan in live trading sessions, of course, too. And yeah, I was just saying a monologue about this, but you missed it. You have to be here. You have to be here to hear those monologues. Okay, so actually, in this session, we will start to backtest the London session. So in this session, we won't backtest the New York session, we will backtest the London session. And the only purpose for this is that actually, I've already backtested the available days 2 times, or even more than 2 times. So in the trading, allows you to backtest 5 weeks of data. And I've already backtested those 5 weeks, like minimum 2 times. And actually, I know everything around New York sessions in the past few weeks, in the past 5 weeks. So it wouldn't be a good session for me. It wouldn't be a good backtesting session for me. And actually, it's pretty boring for me to backtest these New Yorks once again, because in the past few weeks, I spent lots of time with backtesting because I'm just turbo refining something in the strategy. And I'm trying to find good examples for something which you will even noticed about. If it won't be working, then actually I won't update the strategy. But right now I'm just testing something, and that's why I backtested New York session, all of the past weeks New York sessions several times. So yeah, we will backtest the London session. Okay, and generating a random number, and wait a minute. Actually, we will generate a random number from August 10th to September 10th. All right. And it's a 4. Okay, August 10, 1, 2, 3, 4. It's a Saturday. No, we are not backtesting that day. Once again, it's a 7. 1, 2, 3, 4, 5, 6, 7. 16. Okay, so we are going to backtest the 16th of August and London session. All right. Let me just find the day. Sixteen. London opens at 9 a.m. So right here. Okay, sorry. 9 a.m. Okay. Let me just delete all of these drawings from here. Perfect. Question to you guys. What do we have to do before every single backtesting session, every single live trading session, every single case study building session? What do we have to do before we start any kind of movement, any kind of analysis on the charts? News. Yeah, thank you guys for the answers. We have to check the news before we start anything, before we start to analyze anything, before we start the backtesting session, before we start a live trading session. We have to check the fucking news, because we don't want to trade high impact news, because if we are trading high impact news, then we'll be fucked. That's 100% sure that we'll be fucked on the long term if you're trading, or we are trading high impact news. So, which day? 16th of August. Okay, 16. Okay, 16. Okay. Okay, on this day, it's a Tuesday, right? Let me just check the calendar. Yeah, it's a Tuesday. So here, as you can see, no high impact news. We can't see any high impact news on this day. So it means that it will be a safe to trade session. There won't be any unexpected high impact news. There won't be any unexpected medium impact news. These are low impact movements, low impact news, not movements, sorry. So it will be a safe to trade session. Okay, perfect. So let me just start the analysis. We will create a tab analysis as usual. We always create tab analysis for the backtesting sessions, starting from the 4-hour chart, going through the 15-minute, going through the 5-minute, and ending up on the 1-minute chart, where we look for entries. So first of all, 4-hour chart. What do we know about this region? Okay, I will just zoom out a bit and take a look at the overall higher time frame structure. Of course, we know that the higher time frame structure is extremely bearish because it's not a surprise. We already know that in the past few months and weeks, not just weeks, actually in the past year. Please, guys, mute yourselves, or I will have to kick you out from this session. So we already know that in the past few months or year, price was creating a huge fucking bearish movement over and over again, and it's just creating breakout structures on the higher time frame to the downside. So overall, we are in an extremely bearish structure on the higher time frame. We already know this. So after identifying the trend, which we have already knew, we have to zoom on for the 4-hour chart and focus on the less recent 4-hour region right here. Why is it yellow? Sorry. Okay. So we have to focus on the less recent 4-hour region, which is right here. Okay. We already know what has happened here because we've talked about it several times, but actually, I will just run it through. So here was a 1.0000 psychological level where price reacted. So at this time, €1 was exactly worth $1. And this region, lots of retail traders were buying positions and open buy positions. And you can see the footprint here because here on the 1.00 level, price rejected several times, as you can see. After these huge reactions and rejections, price just simply swept all of their liquidity, swept the retail stop losses from below this line with this week, as you can see. Then it started reversal. Actually, price has mitigated. Sorry, price has mitigated a weekly demand zone right here at this region from 2002, but we already know that 2002 and these 20 years old demand zone supply zones are literally very dog shit, so we can't rely on these demand and supply zones because just imagine this demand zone right here, which has been formed in 2002, actually was there for 20 years, was there for exactly 20 years. Just imagine how many orders could still be on that zone. So no one is holding positions on the Forex market for 20 straight years. So more likely, this demand zone is not a demand zone anymore. The only reversal here has been caused by the actual liquidity sweep to the downside and reversal. That was the only purpose of the reversal right here. And yeah, after this price just started the bullish order flow to the upside, a slow impact order flow, slow volume order flow, which actually created slow movement. Just a question, because I can't see the recording is on, I can't see the share screening is on. Can you still see my screen? And is the recording on? You're seeing me drawing on the screen?
Yes.
Okay.
Yes.
It's a bit strange because I can't really see that the recording is and the sharing is on. But if you can see it, then I'm down for it. Okay, so price started a small pullback movement, as you can see, and this pullback movement was the overall pullback of the weekly chart, because as you can see, price is repeating itself over and over again. Huge main order flow movement to the downside, pro order flow, pullback. Huge main order flow, pullback, huge main order flow, pullback, main order flow, pullback, main order flow, pullback, and we are currently in the pullback phase. But of course, at this region, price was in a pullback phase here. But as you can see, price broke above the range. Here was a range high with liquidity. Price broke above the range high and mitigated a 50-minute supply zone right here at this region. Yeah, as you remember, it was a 50-minute supply reaction and reversal. I just kept this on my chart from this region. Actually, it's on my charts for more than a month now. And yeah, price just reversed simply on this 50-minute supply zone and started a bearish order flow after sweeping this amount of liquidity from the upside and mitigating the supply zone. Okay, what else can we see here on the 4-hour chart? That we have a downside range here, right? We have a clear downside range on the 4-hour chart. And yeah, technically that's it. The other thing that we can see on the 4-hour chart that is that price changed the character here to downside. Here was a clean flip zone. Sorry, what am I doing here? And I just want you to mark whoever raises the hand first, whoever raises their hand first in Zoom can mark the last recent supply zone that has flipped this demand zone right here. So if you raise your hand first, you can mark the last recent. Michael. Okay, thank you, Michael. Are you sure? You really sure about that supply?
Yeah.
Because I'm not. That wasn't the supply. That wasn't the supply that flipped the zone. No, a bit below. Let me just zoom in. So price was coming down. These candles, yeah, exactly. That was the flipping candle. These candles were rejecting here on this demand zone, this last recent 4-hour demand zone. And actually, this candle failed to close below. There was liquidity. and that was the other bottom of the liquidity. So this was liquidity. This candle failed to close below this demand zone and just swept the liquidity, right? And after this candle, on the 15-minute chart, it will be much cleaner. After this candle went up to this region. So technically, it just created a pullback. On the 15-minute chart, let me just switch to the 15-minute chart. It will be much cleaner to show you. So as you can see on the 15-minute chart, here price couldn't close below this demand zone. After swept all of the liquidity, it couldn't close below this demand. And here on the 15-minute chart, you can clearly see this pullback. And this pullback on the 15-minute chart, sorry, this is actually the 5-minute. So this is the 15-minute. So after this pullback, price just simply flipped this zone with a body closure here. And as you can see, this wick right here is the pullback on the 15-minute chart. So technically, this is the flip zone for us because this candle couldn't close below. This candle created a pullback, and from this wick zone, price created inefficiency, which has actually flipped this zone. So in this case, on the 4-hour chart, we have this correct supply zone, correct 4-hour supply zone, which initiated the break, and this will be the correct 4-hour flip zone for us. Okay, question. Whoever raises the hand first. Okay, if I'm asking a question, I won't repeat myself over and over again. If I'm asking a question, then please raise your hand. If you raise your hand first, you'll be able to answer the question. So the question is, what else do we have to check? What else do we have to check on the 4-hour chart? Right here at this region, what else do we have to check besides this supply, besides this demand zone, besides this supply tab? What are we have to focus on? What are we checking right now? Abhishek, I don't know if I'm saying your name correctly. Abhishek, is that right? If you raise your hand, please use your microphone. Only raise your hand if you'd like to use your microphone. So second one was Amir.
Yeah, we should check the liquidity.
What do you mean? What liquidity?
On the liquidity in the chart, what side it is attracted to.
Yeah, that could be a good idea. And as we already know, here's liquidity, right? Here's liquidity, and price is currently going down for this liquidity because this is a liquidity target for the shorts, of course. Here could be liquidity for the 4-hour zone. But the question that I was referring to, I mean, the answer I was looking for is that we have to check if price is coming from an unmitigated zone and price is currently inside of an opposite sided zone because the trend is clearly bearish. But we have to check if there's any opposite sided zone that price is currently inside or reacting on. And as you can see, technically, price is at this region, broke below this last recent low point with body closure even, and we can say that price is reacting on demand zone. So this isn't a demand zone. This candle closed nothing. This couldn't even break the structure to the upside. This breakout structure has been caused by this demand zone, and this has been already mitigated the 50%. So technically, price isn't reacting on anything. There is no reaction on the 4-hour chart. So this will be liquidity, this will be liquidity. So this is more liquidity target for us for the shorts. For the 4-hour plan, of course, this won't happen in this session. More likely, it won't happen. So price won't just come up to the supply in 3 hours, mitigate this supply, then continue the downside movement. But if price comes back up to the supply in the 4-hour chart, we'll be able to look for a 15-minute change of character, 1-minute change of character, entry point targeting this liquidity. But more likely, it won't happen. More likely, price will just react on 15 minutes or somewhere around here, create a 1-minute change of character inside of that 15-minute zone, and we'll be able to target the liquidity. But we already know the higher time frame perspective. We know what has happened on the higher time frame. We know what we can expect on the higher time frame. Okay, so switching to the 15-minute chart. On the 15-minute chart, we have to check the 15-minute zones. We have to check what has happened on the 15-minute. And technically, that's it. That's what we have to check on the 15-minute chart. I actually not able to unmute my mic. I chose admit not allowed to unmute. Okay, sorry for it. I don't know what has happened. I cancel within this session. I will try to look after it in the next session. So 15-minute chart. We already know that here's this 4-hour zone. Here's this 4-hour zone that has caused the flip of this 4-hour, caused the flip of this 4-hour demand zone. And below this 4-hour zone, we can actually identify lots of supply zones. So we can identify this supply zone, we can identify this supply zone, we can identify technically no other supply zones, but this was a supply zone too, which has caused the breakout structure here, but it has been broken. So yeah, we can identify lots of supply zones, but it's actually pointless to mark all of these supplies. It's pointless to mark this supply zone. Actually, it's not pointless to mark the last recent supply because the last recent supply zone is right here. This is the last recent supply that has liquidity below it. So yeah, as you can see, here's liquidity. This is not a huge amount of liquidity, so technically it's not even a liquidity trend line, because liquidity trend line will be strong if it creates 3 touches on a liquidity trend line. It's not even double taps because it's not equal, but it could be liquidity. It could be a small amount of liquidity for the supply up here. Okay, so 15-minute chart. As we already know, there was no demand reaction at this region, so technically price is reversed in the middle of nowhere. Question: what happens if price reverses in the middle of nowhere? What happens if price reverses in the middle of nowhere? This is a question. If you raise your hand, you can answer. Amir?
Yeah, it is most likely going to be a liquidity for the future because it's not going to hold.
Exactly. If price reverses in the middle of nowhere, so it creates, for example, price is creating downside structure, creating series of lower lows, lower highs, lower lows, lower highs, and price reverses in the middle of nowhere. So middle of nowhere reversal means that there's no opposite side zone reaction. So if there's no demand reaction here in this downside structure, price reacts on nothing, then more likely price will come up to the last recent supply zone, react on the supply zone, and run this low point, meaning this low point will be liquidity for the upcoming shorts, and we'll be able to target this low point or even below this low point. This is actually the meaning of the reverse on the middle of nowhere. So yeah, price reverse in the middle of nowhere, more likely the exchange of character to the upside will be a false change of character, more likely price will run this low point, it will be broken, it will be liquidity. And yeah, plan for the 15-minute. Nothing much to say about the 15-minute because actually all we have to do is to wait for reversal to supply zone or a break of structure to the downside. So sorry, don't rush. 2 plans for the 15-minute. First plan: if price reverses to the up to the supply, creates a change of character, 1-minute entry point, targeting low point. Second option: if price breaks structure here to the downside, prints a new supply zone somewhere around here, reverses back up to the supply, creating an entry opportunity during the trade. This is what we are waiting for. But if you take a look at my markups in the previous days, previous weeks, you see that I'm doing this in every single live session, right? Live trading session. I'm doing this in every single live trading session that I'm either waiting for a pro trend trade. I mean, in a pro trend trade, I'm either waiting for a return to the pro trend zone, which in this case is a supply zone, or I'm waiting for a new breakout structure and return to a 5-minute/15-minute zone. But of course, these are the 15-minute plans. Not rocket science, really similar, simple plans, really easy to follow plans. If price reacts on that supply zone, we'll look for an entry. If price breaks structure, then reacts on a supply zone, we'll look for an entry. If price breaks above the supply, then we'll look for longs up to this other supply zone. And technically that's it. We don't have to talk about these scenarios because it's so far away, and more likely it won't happen in this session. So yeah, these are the possibilities for this session. Switching to the 5-minute chart. On the 5-minute chart, this is still the supply zone that we are looking at. This is still a supply zone. I won't refine it because there's no inefficiency in the 5-minute. Here's the liquidity, as you can see, below the supply zone. So the plan is the exact same on the 5-minute chart as on the 15-minute. As you can see, here was a middle of nowhere reversal with strong change of characters. Actually, here's the demand zone that has caused the change of character to the upside. But this demand zone will be broken 100%. I believe, not just I believe, I really do believe that this demand zone will be broken, and price will just simply break below this low point, either without reversal to the upside here, or just simply the break here, or just simply with the reversal here. But this low point will be run, this will be broken, and if price reacts on this demand zone, I won't open a long position. I won't open a long position because this is a low probability setup. It will be a counter trade, low probability setup, and yeah, that's it. That's technically it on the 5-minute chart and the 15-minute chart. I will just simply mark this zone to show you guys it will be broken. It will be broken 100%. Switching to the 1-minute. It was a pretty easy plan. It was a pretty easy plan on the 5-minute. It was a pretty easy plan on the 15-minute chart. This is all we have to wait for. And starting the session. And it's already broken. Okay. It's already broken. It's already broken. So broken. So switching to the 15-minute chart. What can we see on the 15-minute chart? We can see that price created an extreme zone right here, which started inefficiency, right? This 15-minute zone started inefficiency, and actually the second scenario has happened. where price broke structure to the downside, printed a new supply zone. Here was a new break of structure to the downside. BUS printed a new supply zone. And if you remember for the scenarios, if price will come back up to the supply zone, create a change of character, then we'll be able to enter for a trade. If price creates a pullback here and breaks structure to the downside, then there will be a new supply zone. We'll be able to wait for a come back up to the supply and continuation to the downside. I'm always trading around these 5-minute, 50-minute zones. I'm always waiting for these 5-minute, 50-minute zone reactions, and I'm always trading based on these zones. These are the highest probability setups. These are the highest probability zones that you can enter on. And yeah, this is what we have to do. If price can reverse up to the supply and print an entry reaction, then you have to wait for a break of structure and wait for the next recent supply zone mitigation. Technically, that's it. Switching to the 5-minute chart to see if there's any refinement on this zone. No, actually, there's no refinement. As you can see, I won't really refine this zone because here could be a refinement, but this refinement has been already filled up the inefficiency. So there's no inefficiency. There's no inefficiency. The only inefficiency is on the 50-minute chart. As you can see, here's the inefficiency between the low point and between the high point. So there's inefficiency on the 50-minute. So I will keep it unrefined. If price reverses up, okay, let me just close these zones a bit. If price reverses up to the supply, okay, actually this gives us new plans. If price reverses up to this new 50-minute supply zone, creates a change of character to the downside, then we'll be able to enter here in the trade. If price flips this zone, then I will be looking for longs. If price flips this zone, I will be looking for longs up to this new supply, old supply zone, because if price flips this zone, then more likely this liquidity will be ran. And technically that's it, new plans. Reverse up to this supply, change of character entry. Can't create a change of character entry, but flip it, then we'll be looking for longs after the supply. After the supply mitigation, we'll be looking for shorts. This is the plan, new plan. Let me just read the chat. New here, do you analyze other pairs or not? Can you see? Mati, you asked some questions in the group too. I don't know if you have checked the contents or contents. It's clearly written down on the website. Actually, you asked in the general chat that if we are sharing signals. No, you asked this question after you entered in the community. No, did you check the contents? In the contents, it's clearly written down that we are sharing Euro USD contents with markups, recap videos, webinars, etc., etc., etc. So please, just check our contents. Thank you. So, new plan. Let's see. Okay, it just keeps pushing down. If price creates a new break of structure here to the downside, and for example, creates a 5-minute or 50-minute supply zone, then no, more likely there wasn't. So, okay, price started the reversal. Let me just play a few more candles, but no, check the 5-minute chart or check the 50-minute chart. We have to check if there was any demand mitigation here in this region, because if there was no demand mitigation, then this is just a simple continuation of the main order flow where price is coming down, coming up, coming down, coming up. And this will be a reversal in the middle of nowhere, then this will be a liquidity point for the entry opportunities. So let me just check if there was any demand reaction here at this region. Technically, no. This is on the demand zone right here. And as you remember, this is part of the liquidity. This reaction right here is part of this huge liquidity trend line. Price just created more liquidity that will be running in the future after a supply mitigation. And yeah, I won't consider this as a demand mitigation. Price reversed in the middle of nowhere, created more liquidity to take for the upcoming shorts. But yeah, actually, as you can see, price has created a flip zone right here. Here was a supply zone, the last recent supply zone that has caused the last recent breakout structure. Price reacted on this zone here with this candle and flip this zone technically from this candle right here. So this is a demand zone right here that has flipped this candle. And question to you guys. Would you open a position here on this demand zone? Yes or no? Would you open a position here on this demand zone? Yes or no? Come on, guys. Draw on my screen. Draw on the screen. Of course, we wouldn't open a position right there. And can you tell me why? If you raise your hand, you can answer the question. Can you tell me why can't we open a position here on this demand zone? Jack?
Because I'd say it's extremely unlikely to hold. It's counter trend.
Yeah, exactly. It's counter trend, and in counter trades, we need a strong change of character, right? Which hasn't happened yet. Here will be a strong change of character. There was no higher time frames on mitigation. There was literally nothing. There was no liquidity. This will be liquidity. So it's absolutely a stupid idea to open a position right here in this demand zone. We are still waiting for short. If price reacts on this zone and prints a good entry opportunity, but leaves us behind, then let it be. If it leaves us behind, then I'm down for it. I'm not going to open a shit-ass bad trade here just because I want to force trades. I'd rather wait for the good position and miss out from all trades than opening random force positions and taking risk reward for it. Because actually, taking a bad trade, taking a trade which didn't fit in your plan, but market is rewarding for that bad trade. Market is rewarding for you. I mean, rewarding you with risk reward ratio is much worse than taking a loss on a good, valid setup. Because if you are being rewarded by a bad setup, so for example, if I would enter a position here, let me just check. Actually, okay, this would have held. So if I would have entered in a position here and market rewarded me for these bad positions, for this out of plan trade, then that is much worse than taking a loss on a valid plan following setup. That is much worse because it will print you a false image. It will give you a false image about your strategy. It will give you a false image about the plan. And in the long term, you will bleed the fuck out. That's why you have to keep only repeatedly executing the main plan, your plan that you're following, that we are following, and only open positions that are good according to your plan. And if there's a position that's not good according to your plan, but you're opening this position, but it absolutely did not fit in your plan, but market rewards you for this shitty idea, that will actually boost your ego in the wrong way. It will boost your ego, and in the long run, it will bleed you out from the market, and you will be the 99% of the people who are losing money on the long term. So that's why it's really important to only open positions that's good according to your plan. Actually, this trade didn't even have two criteria. This is only a one criteria trade, one simple criteria trade. We are looking for 9, 10, 11 criteria trades. So we are still waiting. We are still waiting for the mitigation of this supply zone up here. If the supply will be mitigated. And the supply has been mitigated. Question. What are we waiting for now? What are we waiting for right now? Question. Abhishek, you don't have a microphone. Change of character, 1 minute change of character, reaction, 1 minute confirmation. Exactly, we are waiting for a confirmation. We are waiting for a super easy confirmation. If price flips this zone, then we'll be able to take longs. If price creates a reaction and change of character, then we'll be able to take shorts. This is what we are waiting for. Simple, really simple strategy, rule-based strategy. And actually, there it is. There it is a V-shaped reaction. And if I'm correct, this is a 50% mitigation. Also, yeah. This is a 50% mitigation also. Price V-shapedly reacted. Actually, this 15-minute chart was a spoiler. Doesn't matter. Price V-shapedly reacted on this supply zone and mitigated the 50% of this supply. So what are we waiting for? We are waiting for a 1 minute confirmation. But there's a chance that price will react on this last recent demand zone somewhere out here. Actually, yeah, there's a chance that price will just simply react on this demand zone and take this supply out. If that happens, then what will we do? If this happens, what we will do, we will just simply wait for a long confirmation right here on the zone that flipped the supply zone. So yeah, it's double-sided now. Either the short confirmation, either the long confirmation can happen. But by taking a look at this reaction, more likely the short confirmation will happen because price just swept huge amount of liquidity here into the supply. As you can see, here was a really nice trendline liquidity. Okay, I can draw here. Okay, so it was a liquidity which has been ran into the supply zone. V-shape has been printed, 50% has been mitigated. So we are looking for entry opportunity. This is a pro-trend trade. So that's it. We are looking for an entry opportunity, which has happened. Sorry, which has happened. Here's a change of character to the downside. Change of character happened to the downside. Perfect. Can you just point it out? Where is the supply zone that we are planning to trade from? Anyone? Can you just point it out where is the supply zone that we are planning to trade from? Which supply zone are we looking for entries? Smiley? Yeah, correct. That's the correct supply zone. And can you tell me why are we looking at this supply zone for the entry point? Whoever raises their hand first can answer this question. Why are we looking at this supply zone for the entry point? Pepe?
It creates the chuck
It created the check and
have liquidity.
here's this another supply zone right here. Why are we looking at this supply? Why are we looking at this supply? Inefficiency. Yeah, thank you guys in the chat. Inefficiency.
Okay.
Thank you for the answers, Pepe. Yeah, here's the inefficiency. The change of character, the origin of the change of character is this supply zone. There's the inefficiency. So more likely price will react on this zone. Okay, I would actually set a limit order on this zone. Please, okay, let me just remove drawing. I will actually set a limit order on this zone. If price comes back up to this zone, then we will have a good entry opportunity. Let me just see. Okay, so the 2 pip stop loss covers the zone, but I usually don't use 2 pip stop loss. Currently, in my own trades, I'm using 2.5 pip to 3 pips. So I'm usually using 2.5 pip and 3 pip. I'm only using 2 pip stop losses if the 2 pip stop loss can really cover the zone. In this case, you can see this can't really cover the zone. This is not a good enough cover for me. So in this case, I would use a 2.5 pip stop loss. And yeah, in the past few weeks, past few months, I'm just sticking to 2.5 pips because that's the correct way. Because currently, in the past few months, actually candles start to be bigger. Candles are much more bigger than it used to be a few months ago. And we have to adapt. If the candles are bigger, we will use bigger stop losses. Of course, that 0.5 pip more stop loss won't make any difference, but it will keep you in the trade. So, okay, it's going away. It won't be coming up to an entry point, or we're just creating liquidity right here, but I would not really call this liquidity, but it could be liquidity. Here's liquidity. Okay, tag us in. Okay, perfect. Oh my God. Really nice reaction. Really nice reaction. And as you can see, price just reacted on the bottom of the zone. It didn't even come up to mitigate or just close to our stop losses. It just reacted on the bottom of the zone. Perfect reaction. And literally started perfect reaction. And we are already at break even because price broke below last recent low point, and we are already in break even. So the target point, I've already told you. What is the target point? What will be target right here? I've already told you, but I'm waiting for your answers. Not the 15-minute demand zone. I've already told you target point. If this, okay, let me see. Michael? That's the answer, Alex. The swing low point. Yeah, exactly. That's the answer. That's the answer. Correct answer. We are targeting this low point because this is weak. This low point is weak for us. Of course, we could swing TP other zones. We could swing TP the whole 4-hour liquidity, but the correct 50-minute TP point will be this low point because this is the weak low. This weak low point will be broken more likely. And if this weak low is being broken, then we'll book profit. And sorry, let me just count the criteria for this trade. So counting the criteria. First, starting with base criteria. No, actually, reading the chat. Hussein, no, this isn't part of the liquidity. What did I teach you about candles next to each other? Is it liquidity? No, it isn't liquidity. Candles next to each other is not liquidity. This can be considered as liquidity, so it can be part of the liquidity because this isn't liquidity. Please just check the video about this topic. It's in the recap videos. So base criteria, first base criteria. What's the first base criteria? Of course, higher time frame tap. Asking you, what's the second criteria? What's the second base criteria? Inefficiency, that's right, correct. What's the third base criteria? Pro trend, that's correct. What's the fourth base criteria? Liquidation, exactly. Liquidation. So these are the base criteria that we are looking for. Perfect. Variable criteria. What are the variable criteria? What is the first variable criteria we are looking at? And that has happened. Change of character. Exactly. The first variable criteria is change of character. Second variable criteria. What is the second variable criteria? V-shape. Perfect. Third. What is the third third criteria? 50%. That's what I was looking for. 50%. What is the fourth criteria? Liquidity. Yeah. What is the fifth criteria? I mean, liquidity target. What is the fifth criteria? Liquidity to take and liquidity to target. Combined liquidation, exactly. Sixth, and I read the answer there. Price wasn't coming from unmitigated zone. More likely it wasn't a higher time frame zone. Let me just check. Actually, that was a 5-minute zone, which isn't a zone really because this couldn't really take out the supply zone. So it won't be a zone. The only zone is right down here. This is the only 5-minute demand zone that we could care about because this demand zone could take out the supply here, could change the character. Actually, this demand zone down here couldn't take out anything, couldn't break any structure, couldn't create anything. So this isn't a demand zone, but technically price is that zone. So it could be a demand zone. But for me, I don't really consider that as a demand zone because it literally created nothing besides an inefficiency and it couldn't even take a supply out. So if you can't take a supply out, then it won't be a demand zone. But we won't count that criteria. That's all right for me. 6 criteria. There's still one more. Yeah, that's the answer. Corrective pullbacks, strong pro movement. Corrective pullbacks, strong pro movements. So these are the criteria we are looking at. We have actually 10 criteria for this trade. Once again, perfect execution of the plan. Perfect execution of our trading plan. We were waiting for 9, 10, 11 criteria trades. Happened. 15-minute zone has been tapped. Reaction has been printed. Change of character has been changed. Liquidity swept. Liquidity created. Liquidity is there to target. V-ship happened. 50% happened. This is what we are looking for. This is what we are looking for in live trading sessions too. If this trade happens in a live trading session, then we are trading it, then we are taking it and we are booking profit on it. Or we are taking a loss on it. It doesn't really matter if we book profit on it or if we take a loss on it. We just take these setups anytime. Any fucking time this setup appears on your screen, we are taking it. No matter what fucking thing will happen, what will be the outcome, we are taking these setups because these are good 10 criteria trade setups. Okay, let's see if it hits TP. So far, no, we are in break even. Actually, this could be a good continuation point right here. This looks like it will be a good continuation point if price brings more liquidity for this zone. Then I will enter on that zone. We are still in break even. Okay, TP hit. Yeah, TP hit. Liquidity did run, has been run. Liquidity has been swept. Candle closed above this low point. All of the liquidity from below this low point has been swept. Let's see what happens. Okay, price continues the movement to the downside. Price continues the movement to the downside perfectly. And technically a break of structure has happened here to the downside from this candle. BOS, and the liquidity has been run by these supply zones. Here we have 2 more supply zones. We have this supply zone right here. We have this supply zone right here. We have this supply zone right here, which are valuable supply zones. We are looking to trade from these supply zones. And let me just check the 5-minute chart. Yeah, actually the 5-minute break has happened too, and this is already a 5-minute zone. So this isn't a 5-minute zone up here. Nice. This isn't a 5-minute zone. This is a 5-minute zone. So, you know, this is how the plan continues. This is what we do after we take a trade. We still keep looking for 5-minute zones. We still keep looking for confirmations on those 5-minute zones. We still keep looking for trade opportunities on those 5-minute zones, or we just simply enter or risk entries on those 5-minute zones, on the refinement of the 5-minute zones, because these are continuation trades, which are really, really good trades, which I like to take. And if you excuse me for a moment, I just have to go out for the toilet. So just a minute, guys. Sorry, really sorry.
Hey guys. Do you enjoy the session?
Yes, of course.
Yeah, very helpful.
Of course.
Nice.
Always.
And also, are you high?
Yeah, we have some news, high impact news.
Nice to hear that. I will check it later. Thanks for mentioning it.
Here I am, guys. Sorry. I just really had to go out. No, I won't give you the remote control. Okay, let me just continue. So, okay, where was I? Continuation happened. Another breakout structure to the downside happened. So the plan continues. If price comes back up to the supply zone, more likely I will decide if I will take a risk entry here on this supply zone. I will decide if I will take a confirmation entry. Question. One more question. This is being a really interactive session. When will I take a risk entry here on this supply? When will I open a risk entry here on this supply? When is the only time when I'm opening a risk entry in a continuation trade? What do I need to see for a continuation trade? Liquidity creation, exactly. I need liquidity creation. As you can see from me, from my recap videos, if there's liquidity creation for a supply zone, I'm sorry, not a supply zone. If there's liquidity creation for a continuation trade, then I will take that continuation trade. And of course, if that 1-minute POI is part of the 5-minute POI, then I will take that continuation trade. Basically, these are the criteria that I'm taking continuation trades based off. I'm taking continuation trades based off these criteria. So if price creates another breakout structure to the downside, continues the overall main order flow, creates a 5-minute zone. Inside of the 5-minute zone, we can identify a 1-minute zone. And if there's liquidity for that 1-minute zone, then I will enter in that continuation trade. And of course, this is only for if price won't go further down up from my entry point. So if price continues the overall structure to the downside, just prints more breakout structures, and the reversal here, and creates a completely different bullish order flow here, then I won't take this setup. Then I will wait for a confirmation, of course. But if price just simply creates one simple structure or one more breakout structure with liquidity creation, then I will simply wait for the 5-minute zone tap, enter on this 5-minute zone, refine 5-minute zone with liquidity. And this is how I usually take continuation trades. You can see this from my recap videos. In the past few months, I literally took so many of these continuations. These are my favorite continuation setups and the strongest continuation setups. Okay, so we are waiting for liquidity. And there's liquidity. There's liquidity or there's liquidity. And of course, there's also inefficiency. Here's inefficiency, as you can see, started from this supply zone. And this week in itself swept some liquidity. It swept some liquidity from this region, but this isn't as valuable liquidity as it has to be because, these are candles next to each other, so it can be considered as liquidity. The only liquidity that I'm seeing here is right here because, this high point printed 1, 2, 3, 4, 5 candles. So technically this is the first tap. This is the second tap right here. This could be considered as a small liquidity, but these candles next to each other aren't liquidity because this isn't the first, this isn't the second, this isn't the third, fourth, fifth tap. This could be the first tap, this could be the second tap, but this isn't 5 equal taps next to each other. This is just a small amount of liquidity. And this liquidity has been swept by this candle this week. And after the sweep of the liquidity here, price just created a breakout structure to the downside. And currently, here's liquidity for this main order flow continuing zone. Okay. In this case, question. What will you do? This is a question. Once again, if you raise your hand, you can answer. What will you do in this situation? Michael?
Yeah, I will just wait for a confirmation entry because we have another supply zone, the X3.
Yeah. And actually, this is a good answer. But as you could see from my previous backtesting sessions, trades, etc., in these cases, because there's still this extreme supply zone up here, and this could still be the whole part of the liquidity, but there's still a chance that this liquidity will be able to reverse price to the downside, but there's still a chance that this liquidity will be swept and this supply will be tapped. What am I usually using? What do I use in these kind of scenarios? Exactly, 0.5, 0.5. Thank you, guys. I'm using 0.5 and 0.5, so resplit. No. Let me just check if there's a coverage of this zone. If I'm setting a limit order with 2 pips. No, 2 pip can't cover this zone. 2 pip stop loss can't cover this zone. On those scenarios where 2 pip stop loss can't cover a whole zone, I usually use 50%, and of course with 2.5 pip. But in this case, 2.5 pip can cover the zone. Okay, so let's just try this one. And of course, set a limit order on this one too. 2.5 can cover this zone. Let me just see. Okay, so this is what we are seeing now. And we are in. Okay. And we are out. That was fast. And price is going to our direction. Let me just check. Price, actually, session will close in 10 minutes, but there's a good confirmation entry. As you can see, if we were waiting for confirmation, on this 5-minute zone, then the confirmation has already happened. Here is supply zone that has printed a confirmation because it has changed character here to the downside, as you can see, and there's liquidity below this entry point. So this is actually a new entry opportunity right here. Sorry, where is it? Liquidity. This is a new entry opportunity right here, which I will take, but session closes in 10 minutes. But actually, if price can tag me in this trade, then I will actually be happy. 2 pip can't really cover this zone. I will use 2.5 pip stop loss right here. And yeah, let me just mark it. Change of character. Track the criteria for this trade too. I will just read the upper limit because actually the confirmation has already happened on the downside area. So it's literally unnecessary to wait for the mitigation of this higher time frame zone, higher area zone, because the lower area zone has been mitigated and the confirmation has already happened on the lower area zone. And let me just scan the criteria for this trade. Higher time frame zone mitigation. Of course, here was a 5-minute zone. Second, let me just ask, as for the base criteria, what's the second base criteria for this trade? Second base criteria, come on guys. Pro trend, exactly. Pro trend second. Third, inefficiency, exactly. Third, inefficiency. Fourth, last base criteria. No, higher time frame already there. Liquidation, exactly. There was a liquidation too. Okay, so variable criteria. Fifth criteria. Okay, I'm asking for these criteria to repeat in every single live session because I want you to memorize these criteria. I want you to memorize all of the criteria. I want you to know these criteria from head. Fifth, change of character, exactly. What is the sixth criteria for this trade? 50%, exactly. Seventh criteria, what is the seventh? Come by liquidation, perfect. Eighth criteria. Not coming, exactly, because it isn't coming from an unmitigated zone. This isn't the zone, once again. This 1-minute zone didn't even take out a 1-minute supply out. So this isn't the zone. This is not a zone. You know, we already have criteria for zones too. A zone has to take a opposite sided zone out, or has to break structure, or has to change character, and has to have inefficiency, and plus criteria for the zone, for a demand or supply zone, is liquidity. This zone has only have inefficiency, but didn't even take a supply out. So this isn't the zone. This is in the first video of the main video course. So 10 criteria, is there any 10 criteria? Liquidity target, exactly. 11 criteria, corrective pullback. That's it, guys. That's it, guys. 11 criteria trade. This is an 11 criteria trade. In and out. In and out again by literally a pipette. Then, of course, it would have been a break-even trade. Actually, if it would have kept me in the trade, but it wasn't after the session. It would have been a break-even trade because, as you can see, price broke the last recent low point here to the downside. So it would have been a break-even trade if it would have kept us in the trade. And technically, that's it. The session has closed. So as you can see, we took 3 trades in this session. First one was right here. It was, how many criteria did this trade have? 10 criteria. This trade was a cancellation trade. We can't really track criteria for a cancellation trade because, you know, it's a cancellation trade, but it was a high probability cancellation trade with a flip, with a liquidity creation, with a pro trend movement, etc., etc., etc. So it was a really good cancellation trade. And here was a confirmation of that 5-minute zone that has caused the last recent break of structure to the downside with 10 criteria because there wasn't a V-shape recovery. So technically this isn't a V-shape, or we could call it as a V-shape because price aggressively reacted on it, but I won't call it as a V-shape. So once again, 10 criteria trade, booked almost 9 restore ratio on this trade. So there was 9 restore ratio. Then we took a loss, that's -1. We took a loss, that's -1. 7 restore ratio in total, right? So as you can see in the session, we could have found 3 trades, 3 really high criteria setups, 3 really good criteria setups. First trade was 10 criteria, second one was a cancellation trade, third one was 10 criteria setup. And we booked 7 restore ratio. And that's why I said at the beginning of the session that you have to keep execute the setups, the high criteria setups, the plain feeding setups, regardless of the outcome. Because on the long term, more likely the next trade, the next high criteria will be a winner. And you will be able to book high restore ratio. Sorry, brain fart again. So you will be able to book high restore ratio on the trade, on the next high criteria trade. So that's why you have to keep repeatedly executing these trades, repeatedly execute your plan, repeatedly execute your criteria, because these will reward you on the long run. Of course, we took 3 trades. Actually, this is a 33% win ratio. From 33% win ratio, and we booked 7 restore ratio. That's what you have to do. You have to keep executing these trades because these trades will reward you with high restore ratio. Fuck you. No meme, no meme time. No fucking meme time. Don't clip this. Don't clip this. If you remember for the why this and this, why this and this, then you know what brain fart is. But yeah, actually, this was a pretty fucking good session, guys. 7 restore ratio, really good restore ratio. It's not a 30, 40, 50, 100 restore ratio, but it's a really, really good, consistent restore ratio we could book. And you can see the power of the strategy. You can see the power of the strategy. We took 2 losses, we took 1 win, 3 trades overall, and we're still in profit. We're still in huge profit. We're still in actually 7% profit. You can see the actual beautifulness of this strategy. You have to keep repeatedly executing these criteria. It's really, really important to only trade, only execute the setup if you see these criteria on your screen. Not specifically these, but your criteria. If you see your criteria on the screen, then you can enter in a trade. If you don't see a criteria on your screen, if you don't have a plan, if you don't have anything that you can actually execute a trade based on, then you are not trading. You are only trading if you see high criteria setups like these. And that's it, guys. Yes, no, everything understandable. So I assume everything is understandable. If you have any question, do you have any questions, guys? If you have a question, I will be happy to answer it. Pepe?
Hi, Marcel. Yeah, in the lower point, can we check the 15 minutes, please?
Yeah, of course.
In the back time.
What do you mean? Right here?
Only to see, yeah. Ah, okay. Yeah, okay, there's nothing.
This was liquidity.
Yeah,
For this.
okay.
This was a low point which couldn't take a supply out and actually created nothing, but was part of the liquidity right here also.
Okay, thank you.
You're welcome. I would like to ask you about the first trade. I see this as liquidity. First trade as liquidity. Why do you see this as liquidity? Why is this liquidity for you? I will tag you in the recap video. No, these aren't equal highs. These are candles next to each other. I will find the link and send the link to you. This isn't liquidity. Candles next to each other can be considered as liquidity, but I've already broken it down. So we'll find the video and send it to you. Great session. Actually, I have a good question about another topic. Could you please give an example of buy to sell, sell to buy? Already made a webinar about this topic. Just simply search for buy to sell in the Telegram channel, and the video will come up for you.
Marcel, I have a question about the first trade.
Yes.
When we entered into the first trade, you did not take the middle or the, you know, you did not take the supply zone into half. You took it
Because
at the edge.
this isn't inefficient. This is efficient.
Okay.
There's the inefficiency. Clear?
Yeah, but within that zone, the one which we took upon the trade, the sale, the short, we did not split the zone into half.
You mean I didn't use the 50%?
Yeah, exactly.
Because
50%.
the two pip stop loss and the 2.5 pip stop loss cover the zone. Even the 2 pip stop loss cover the whole zone.
So yeah, if it is too small, or maybe I thought maybe there is a
It's
reason
literally
why-
unnecessary to use a 50% entry because the 2 pip stop loss even can cover the zone.
Okay. Thank you.
You're welcome. Any more questions, guys? Ask your questions. I'm here to answer them.
Hello, Marcel.
Hey, man.
Why didn't we take this before